Hello and welcome to another motorcycling video. Today is Friday, the 18th of July 2025. It's about 8:30 in the morning. I just finished my morning run and I'm riding home on the Spider. And so in this video, I'm going to talk to you about insurance. Now, that's not the most exciting subject in the world, I understand, but I feel as if I need to talk to you about it. I should, for clarification and disclosure purposes, make a couple of things clear. First of all, I'm not trying to sell you an insurance policy of any sort. I don't work for any insurance company. I have no interest in insurance companies other than buying my own insurance for various things, motorcycles, cars, so health insurance and so forth. And also, I'm not a lawyer. So things that I say here ought not to be taken as legal advice. And if you're considering any insurance products, you need to consult an insurance broker and maybe get some legal advice, but determine whether the insurance that you're going to buy is suitable for your needs. I'm prompted to do this and make this video because I read an article yesterday that said something like 30% of people who have motor vehicle insurance don't know what it is, don't know why they're paying for it, and don't know what it does. So I thought this would be a good opportunity to try and explain some of those things and make it clear to people, well, what is the insurance that you have? Why do you have it? What are you paying for? What do you get? So there are essentially two types of insurance policies that you can get for your car or get to cover motor vehicles, cars, motorcycles, and so on. One insurance policy covers people. The other insurance policy covers property. Let's talk about the people one first because it's probably the most important. If people are injured in accidents, in motor vehicle accidents, we want them to be covered. We want their medical expenses to be covered. And if they need long-term care as a result of a motor vehicle accident, we want that care to be provided. So in New South Wales, the motor vehicle insurance that covers people in accidents is called CTP, which stands for compulsory. And that's the key word here, compulsory third-party insurance. It is insurance that you have to have and you get it before you register your vehicle. So if you're buying a new vehicle, for example, then the dealer that you're buying it from will probably take care of the registration process for you and get your CTP or green slip, as it's also sometimes called, insurance through their preferred insurance company, or you can arrange that yourself and go to them with the proof of the CTP or green slip insurance, and then they can proceed with the registration. If you're buying a second-hand car and the second-hand car is being sold by a dealer or a private individual, it doesn't matter how you're buying it, it just matters if it has registration on it. If it has registration on it, then it has a CTP or green slip insurance policy attached to it. The problem is that the insurance policy is in the name of the person who is the registered owner of the vehicle. So when you buy the vehicle, you have maybe 10 or 14 days, I'm not exactly sure what it is, but it may be 10 days, it may be 14 days, in which you need to transfer the registration to your name. So how you do that is you go to the RMS, that's the Roads and Maritime Services, who services New South Wales, or you can probably do it online, and you call up the registration number of the vehicle that you've bought, and you indicate that you are now the registered owner of that vehicle, and then the green slip or CTP insurance will automatically transfer and cover you. When you come to re-register that vehicle, what you have to do is you may need to get a roadworthy certificate or a safety inspection to say that it is roadworthy. If your vehicle is more than 5 years old, you will have to do that. You will then have to go and get green slip insurance, CTP insurance. In New South Wales, you are required to provide that yourself. And all insurance companies are required to offer green slip insurance. And so you can shop around. There is a website that the New South Wales government operates where you can compare green slip prices, but you need to get your green slip insurance. And once you've purchased it, the insurance company will automatically send notification electronically to the RMS, that's the Roads and Maritime Service, that you have purchased green slip and you are then able to register the vehicle. They will probably give you if you bought it from an insurance broker, the insurance broker will give you a paper copy, and you could go down to the Local Services New South Wales office and take care of the transaction. Now, it's important you do that transfer of registration within that time frame, whether it's 10 days or 14 days, I'm not sure whichever one it is. It's important that you do it in that time, because if you do it later than that, there will be an extra penalty. The transfer costs you something like 3% or 3.5%, I'm not exactly sure, of the value of the car. That is based on what either the price that you paid for it is stated on the contract or stated on the paper that the previous owner has written how much you paid, or if the RMS think that you're lowballing them by understating what you actually paid for it, they'll say, well, we'll charge you 3.5% of the market value. But so green slip insurance, or CTP, or compulsory third-party insurance, the word compulsory is the key word there, is something you must get before you register your vehicle, and you must have it. If your vehicle is not registered and you're driving it on the road, then of course you don't have any insurance and you're not covered. And if somebody is injured as a result of you driving your vehicle while it's unregistered, you could be in a lot of trouble legally. You could be up for serious money and court time if a person is injured and decides to take you to court. If you drive while you're unlicensed, not only is that criminal, you could be your CTP insurance could be void. So don't drive while you're unlicensed, don't drive an unregistered vehicle, and do renew your CTP. Well, you can't register your vehicle without renewing it. Now, in some other states, in Victoria, it's called TAC, which stands for Traffic Accidents Commission, and it's included in the registration. When you receive the renewal of registration, it's included. In Tasmania, where I'm familiar with the registration process, it's called MAIB, which stands for Motor Accident Insurance Board, and it's included in the registration. When you get the renewal papers, it'll break it down into rego fee, road tax, MAIB, and GST. In some other states, they do it slightly differently, where you have to go and look for it yourself with various insurance companies, but essentially it's the same process, and you must have it. It's compulsory. Now, the other type of insurance covers property, and there are two options here. The first option is what's called third-party property damage, and that means that if you have a third-party property damage insurance policy on your car, that means if your car damages anybody else's property, another person's car, another person's house, you might run into their fence or something like that, or you might run through the fence into their garage or something like that. If you damage another person's property in any way and you have third-party property damage, the insurance policy will take care of the repairs to the person's property. There'll be some out-of-pocket fee, which is called the excess, and how much that is depends on your age and your driving record. But essentially, the damage that you cause to another person's property will be covered by the insurance. What won't be covered is damage to your property. So if your car is damaged, the third-party property damage policy will not repair your car, and you'll have to find a way to either take care of that yourself or drive your car while it's damaged and so forth. So the third option is to have comprehensive car insurance. Comprehensive car insurance is obviously more expensive because not only does it cover property that you might damage, including other people's cars, it also covers your car. So if you're in a collision and you are at fault and you damage another person's car or their house or their garage or their shop or something like that, the repairs to that property will be covered by your insurance policy. The repairs to your own car will also be covered by that insurance policy. You will be up for two lots of excess, that is the excess on your own policy and the excess for the damage to the other person's property. How much that is, again, depends on your policy, depends on your age and your driving record. With whichever insurance policy you buy, whether you buy the third-party property damage or the comprehensive insurance policy, you will get with the policy, either paper form or electronic form, something called a PDS, which is a product disclosure statement, which tells you what the policy covers, and it also explains to you how much the excess is and under what circumstances you might be required to pay it. Now, how do you work out which policy you should get? Should you get the third-party property damage or the comprehensive insurance policy? Well, there are some clues here. If you buy a new car, then you're probably going to want comprehensive insurance because it's an expensive item. And if it's damaged and you need it to be repaired or replaced, then the insurance will cover that. If you have that policy under any sort of finance, then the finance company, be it the bank or a credit union or somebody else, will require you to have comprehensive insurance, a comprehensive insurance policy, because you are protecting their asset. They actually own the vehicle and you're paying it off. And if the vehicle is damaged or written off, they will want there to be insurance to repair the vehicle to the condition it was in when it was new, or as close to that as it can be. Now, if your vehicle is a little bit older, I don't know exactly how old is older, but for example, if your vehicle is 10 or 15 or even 20 years old, unless it's a unique piece or a collector's item or a historic vehicle of some sort, you might think that third-party property damage is all that you need, because you might think, well, by the time I pay the premium and by the time I pay the excess, I'm actually paying more than this vehicle is worth. So if the vehicle was written off, the amount of money that you might get in settlement would be less than what you've already paid in the premium and what you've already paid in the excess. Now, that's a decision only for you to make, and you can only make it based on your own financial circumstances, whether you can afford comprehensive insurance, whether you think it's worthwhile for your car, whether you think it's value for money for your particular vehicle, and so on. How will you know what your vehicle is worth? Well, you can try looking up on any of the online car sale sites and see what people are selling or attempting to sell the car that's the same model as yours as. That doesn't mean that's what the insurance company says it's worth, because people selling it privately are obviously going to ask for the highest price they think they can get. And dealers who are selling a car, they're selling it at the price they paid for it, plus whatever they added on to make their profit after they presented the car and cleaned it and put it through the workshop and so on. So the insurance company's value will be what they call market value, which is what they say that car is worth on the day that you make a claim. And that will depend on all sorts of factors, including the age of the car and the model of the car and so on. If, for example, you have a car that's no longer sold in Australia and hasn't been sold for 10 or 15 years, then it's likely the insurance company is going to say, well, we can't get parts for this car, we can't repair this car, and the car is going to be written off, but you've already paid a substantial amount in premium and excess, and what they're offering you is going to be less than what the car is, what you've already paid out. But that's a decision for you to make. So work out, how valuable is my car, a brand new car and a car in its first 5 or 6 or 7 years, given the way cars perform these days and the warranties on them. It's probably in your best interest to have comprehensive insurance. If your car is like the little car, I have a little car in Tasmania, a Daewoo Matiz. It was built in 2003, the last year they sold those cars in Australia. So it's 22 years old. Probably no more of them are available in Australia. You can't get parts for it. Or you probably can't get parts for it. And if panels needed to be repaired or replaced, that would be very difficult. So its value is probably only $2,000, something like that. The premium I got for comprehensive insurance plus the excess was close to the value of that, minus GST and so on. So it was not worth me paying for comprehensive insurance. So I paid for third-party property damage only. So the three types of insurance: comprehensive third party, or CTP, or green slip, or TAC in Victoria, MAIB in Tasmania, is insurance you must have to register your vehicle. Third party property damage is an optional policy you have that says, I haven't got my own vehicle insured, but I've got insurance in case I damage somebody else's property. Comprehensive insurance says, I've got my own vehicle insured and I've got a policy that covers damage to other people's property and also repairs my vehicle. It's obviously more expensive, but depending on the age of your car and how much you paid for your car, it might be in the best interest. Now, I'm not advising you to buy one or have one or other policy. I'm just explaining to you what those various policies are, what they do, and what you're paying for. Hopefully you have a clearer idea now of what the policies are, what they do, what you're paying for, and why you pay it. Have a good day. If you have any comments, please leave them in the appropriate section, and when I become aware of them, I will respond to them. Thanks for watching, and I'll catch you in the next video.